What's up? What's up? Haha, happy Friday. My voice is a little scratchy. I've been fighting a cold the last week or so, but I really want to do this video today, so just bear with me. All right, don't make fun of me too much for my voice. All right. So everybody always tells me, Dave, you're the best real estate broker. Dave, you're the best property manager. Why don't you make more real estate videos? Well, I would argue all my videos relate to real estate, but today it's a real estate video. That's what we're going to make. All right. So, you know, everybody on the timeline, on Instagram, on Facebook, everybody who's in this business, there's a narrative that's being spun, right? And, a lot of it is FOMO, it's fear of missing out, right? And I don't think that's a good strategy. Never chase, right? When I work with clients, and these are examples, right? What are the examples? Like this, the Fed's cutting rates. Got to get in now. The rates are dropping. The prices are going to go up. The prices are going to go up. You're going to miss out, right? And what happens? People get frustrated, right? They just get frustrated with the process. They think it's never going to happen. Nobody's advising people, right? And in our business right now, our real estate industry is going through some changes. There's massive disruption. And I think it's so exciting, right? And, so I embrace it. I think it's great. So when I make these videos and we talk about these different things, right, it all relates back to the goal, right? So, one of the goals that everyone should have is own your castle, right? Own where you live. And to get there, there are some substantial barriers to entry, but I have ways to overcome them, right? And it's about creating habits and doing things and having a plan. And if you do that, this noise right here that everybody's posting and trying to share with you and scare you and that you're missing out, it doesn't matter. You'll ignore that because you're focused and you have a plan. All right. So for today's video, we're gonna make a plan, right? I'll show you how I would make a plan with the client and how we would have a long-term goal and a strategy to get them what they want. Okay. So let's pretend it's January 2023. Okay. So roughly 23 months ago. So a first-time buyer in Fall River, Mass. What does an average first-time buyer house look like? Okay, I just went in online, looked up recent sales. This one caught my eye. Perfect. Okay, I don't know anything about this house. Shout out to whoever sold it. $460,000, 3-bed, 2-bath. That's pretty much entry-level house, Fall River, Mass. Right? It's good enough, nice area, nice-looking house. It's what people want. Right? So how do we get there? Right? Because that's the insurmountable part. Because when you're caught up in this stuff and you're focusing on rates and you're getting caught up in the noise, and a lot of this information is bad information. I'm going to show you. Okay. So the first thing I do, I'm going to sit down with you and we're going to figure out, everyone's on a monthly budget. What does that look like? It's a mortgage calculator. We put it in. Long story short, you're going to have to pay the bank about $3,600 a month. Okay. So right there, $460,000 house. The main barrier to entry is the first blue box, total to buy. Okay, so you're going to need about $31,000 to buy a house. That's the problem that everybody struggles with. There's no money down options. Those generally are fake news, right? Those are very unique situations where they work. That's not a good strategy. Okay, during the recent campaigns, there were people talking about giving out large chunks of money so people could buy houses with all these strings attached. All that does when the government gives out money is make the price of the houses go up to offset. That's all it is. It's just inflation. So that's not a good strategy, okay? So my strategy is create good habits, have a plan, and let's get you there. And whenever that day is, right? So January of 2023 is if we started to make this plan, okay, we know that we need to get you about $3,600 a month. Okay, if your rent right now is $1,700, this is your difference right here, $1,900. So the first thing you need to do is get in the habit of paying that payment every month, right? So that's easy. You can implement that on day one. Okay, and we'll get into that in a second. Now, the other thing that I want to talk about is right here on the right. So the rates, it's the same rate that it was in January of last year. It really hasn't changed much. It's actually going up right now. Right? How is Jerome Powell lowering rates and mortgage rates are going up? Oh my God, Dave, what are you talking about? That's not what I saw on Instagram. No, bro, like Jerome Powell, the government does not control this stuff. Okay, the rates are set by what people are willing to pay to take our money that is debasing quickly. All right. Home prices, 6% last year, 4% through August of this year. This is Case-Shiller National Home Price Index. There's a lot of nuances to those numbers, but basically, the homes aren't going up as much as you're being told, right? When you're seeing these memes, prices going up, rates dropping, not really. The rates really haven't moved in the home prices. While they are going up, not as much as you think, okay? The real number that you have to think about as well is inflation. The government tells you a fake number, 5.5% over the last 2 years. That's a fake number. The real inflation is 10 to 15% a year. That's the number I work with when I'm trying to set myself up. All right, so let's deep dive the rates in the past 2 years in the home prices and how they relate. Okay, so you see this chart right here. This is Case-Shiller, the national index on the left, and you can see how it just calculates every month a change in overall average prices around the country, and on the right is the rates. Well, if you notice something there on those mortgage rates, January of last year, average rate was 6.25, right? October of last year, it peaked out at 7 2/3, right? 7.6. Started to come down a little bit, went back up in May, got down in September to 6%, and it went back up in October. But how did the mortgage rate go up if Jerome Powell's cutting the rate, right? This is the thing that you need to understand. Jerome Powell does not control the mortgage rate. So any of your advisors out there that are sharing that with you and trying to tell you that, that's not a true fact, okay? And if you notice, if you look at those rates, right, the red is where it was going up higher. On the Case-Shiller side, the red is where the prices were growing less or even dropping. It's about a 2-month lag, just something interesting to notice in the data, right? So you can see, the rates started going up in August, September of last year. The prices started dropping around October, November of last year, right? So it's about a 2-month lag. So what is the rate based on? What's the number you need to watch? Well, there's two things, okay? Mainly, it's this 10-year Treasury number, okay? This is the number that people, the rate that people need to receive to give money to the government, to loan the government money. When they print it, they need to sell it. That's what these yields are on these treasuries, okay? And if you notice, if you think I don't know what I'm talking about, look at this chart right here. You see that big giant spike in the middle? That was September, October last year. Look at what happened to the mortgage rates last year, September, October. Big spike, right? Then you see that spike dropped off coming in December into January. Look at the mortgage rates. December into January, they dropped. Then you see March into April this year, the rate that chart spikes. Look at the mortgage rates, same behavior. And now if you notice, what is that chart doing now? It's trending upward, right? So even though we're lowering rates and we're trying to convince you that inflation is gone and that everything's okay, it's not true. Because this is the real story, right? The bond market tells the real story. Not what the government tells you, not what the news tells you, not what your advisors are telling you, sharing memes online. Okay, that's the real story. Now, why is this number so bad? Well, it always comes back, in my opinion, comes back to this number. And that's why I share this number all the time. Our national debt is $36 trillion, guys. This is inflation, okay? So this is why rates are staying high, right? This is why, no matter what they do with this Fed rate, it doesn't matter. It's this number right here. But we can beat this number. In history, the barrier to entry to beat this number has never been lower. And if you take a little bit of a long-term view, right, and you understand what I'm about to show you right here, and the strategy I would make with you if you were my client getting frustrated because you can't buy a house because you're getting priced out and you're feeling FOMO and you're like, dude, the bank's not giving me what I want. I can't get enough. I don't have enough money saved. What am I going to do? If you just take a breath and you take a long-term vision, you can win and you come out so much stronger. And because these numbers aren't changing anytime soon, okay, I'm very bullish with Trump and Elon and the Department of Government Efficiency and all these things that they want to do. But that's going to take time to filter through the system. Trump's going to get in January. It's not going to, February 1st, everything's not going to be fixed. We have to be realistic. This will take time, a couple of years. So you got plenty of time. You didn't miss the boat, okay? That's my opinion. Okay, so, but all right, so getting back to what I would tell a client, your mortgage is $36.15. You need to be able to pay that number comfortably every month. If you can't do it, then the $460 house that you're looking at is not an option, but that's okay. we build up to that. So your rent is $1,700, invest the difference. So in this case, we're going to invest the entire difference because you can afford it. All right. So the three most important words I tell anybody, and if you watch all my videos, it's the same message. Pay yourself first. Always pay yourself first. That's the first habit you have to create. No matter what, pay yourself first. And that's hard for people to wrap their head around. And listen, the last 2 weeks, a lot of friends, a lot of family, I'm so excited for them. They're starting to realize, all right, I'm setting up Robinhood accounts. I'm teaching people where to learn about different investments. We're setting up Apple credit cards to get the 2% cash back to invest, all these different life hacks. So I'm very excited that people are starting to realize, all right? But most importantly, pay yourself first. Get in the habit of paying yourself first. So how do you pay yourself first? Putting the money in a bank account, I would highly say that is a very bad strategy. Don't keep it in the bank because inflation is stealing that money from you every single day. Okay, so some of you are averse to risk. I get it. Not everybody is me. Not everybody is willing to take the risk. At the very least, just get a money market account, right? A Fidelity brokerage account with a basic money market fund. Okay, so our example started in January of 2023 to November 1st of this year. That's 23 months. You put $1,915, right? The difference of your rent to your mortgage payment. So you're in the habit now, right? You're waiting, you're playing the long game, you're saving money. Okay, you've made your mortgage payment for 23 months. What is the sticker shock going to be when you buy the house? There will be none because you're used to making that payment. You've trained yourself. You've created that habit to be comfortable in your budgeting and your lifestyle to afford the house that you want. And in the meantime, the difference, you've stacked a nice little bag. So you put 40, that adds up to about $44,045. Okay. At the end of 2 years, though, these money market funds don't even keep up with inflation. That's the tough part with that. Okay. Yes, the number doesn't go down. And psychologically, you're like, oh, there's no risk, but you're losing money. I promise you. Factor inflation, you're losing. And the return on this particular one is down over half a point. 2023, it averaged 4.8%. This year, they're down to 4.3%. Okay, 4.2. So, but again, the money you needed to buy a house, you got your money, and you got about a $15,000 emergency fund. Don't buy a house without an emergency fund. Okay, don't do it. I know you're desperate. You want to buy a house. You feel FOMO. All the agents are telling you FOMO, FOMO, FOMO. Don't do it. Like, take some time, long-term strategy, and you will be in a much better position. Okay, so we want to get a little more gains than that. I think that, listen, for some of you, do it. If that's what works for you, I'm not giving advice where to invest. I'm just showing examples from January to this month, okay? Next up, S&P 500, okay? If you had done that, every first of the month, you paid your rent, $1,700, you took your $1,900 and bought shares of SPY, which is an S&P 500 ETF. Okay, January of last year, you got 4.7 shares. February, you got 4.8. As it went up, you got a little less shares every month, but your bag is growing. At the end of those 23 months, you put your $44,000 in. You have 92 and a half shares of S&P, right? $55,000. Not too bad, right? 25% return. You pretty much, S&P keeps up with inflation. You did good. So you got your home buying bag and you got $24,000 emergency fund. I would argue leave it invested. And I know there's taxes when you sell. I mean, this is a very basic model. All right. But the idea of creating the habit of paying yourself first and what to do with it. All right. You want to chase a little more gains? Invest in the NASDAQ, another ETF. Same idea. You would have ended up with about $2,000 more. Okay. So now you got your money to buy a home. You've created the habit of making your mortgage payment every month. The prices are the prices of the house. It doesn't matter because you've offset like the fear that you're missing out on the prices potentially going up and it's driving you crazy and frustrating you. You just hedge that because you've been invested the entire time and you've made some gains. So yes, the house might be a little more in 2 years, but you're in a much better position financially. You've created good habits and you're good to go. And you didn't really lose as much because you got the gains on the investment. Okay, so that's NASDAQ. Now getting into my type of investing, Tesla. Right? Had you been buying Tesla every month, Tesla was dead money under the Biden administration. Okay. A lot of lawfare against Elon, various things happened. The stock was dead money for the last 2 years, which is great because if you're buying it and you're dollar cost averaging and you're buying every month, you could have got 205 shares of Tesla. All right. And the value of that Tesla on November 1st was double what you needed to buy a house. So you would sell 100 shares to get the money you need to put down on your house, and you got 100 shares in your emergency fund. I personally think, not financial advice, but my thesis on Tesla, all the videos I made, watch them. I think 100 shares of Tesla could be life-changing money in 5-10 years. I really, truly do. But 200 shares, had you implemented this strategy, is still life-changing money today because it got you the habits and the money you needed to buy a house comfortably. All right? Little steps, little habits every day. All right. And finally, the granddaddy of them all, I had to put this in here, is Bitcoin. Had you been buying Bitcoin for the last 2 years, all right, you would have amassed over a whole Bitcoin. On November 1st, that was $98,000 on your $44,000 investment. So you sell 1/3 of a Bitcoin, you would have 3/4 of a Bitcoin in your emergency savings fund. And yes, it's volatile. It goes up, it goes down. I get it. Okay. But over time, generally, it just goes. All right. And and that's my Bitcoin thesis. Regardless, 3/4 of a Bitcoin 10 years from now, life-changing money. 1 Bitcoin today, obviously, is life-changing money because it got you to your goal and you got a good emergency fund. You're set. You don't have to worry. All right. So my whole strategy when I work with clients, all right, it's not fear of missing out. It's not getting rich quick. That's not why I invest. I do not invest to get rich quick. It is not about getting rich. Okay. If you want to lose weight and you focus on the 100 pounds that you want to lose, you're going to get frustrated. So it's not about that. It's about creating and implementing habits to avoid being poor. You want to lose weight, you change what you eat. Every day you eat differently. You exercise a little bit every day. And over time, the gains add up, right? Or the losses, I guess, when you're losing weight. And it's the same thing, right? Create and implement habits to avoid being poor, right? And if you do that, as a byproduct of those habits, a continuous discipline. If you do these financial strategies every single day, and there's up days, there's down days, right? When you're invested, there's volatility. There's all these different things. Like, don't do any of this because you watch my video, but this should get your brain spinning, right? And if your advisors in your life are not having these conversations with you and being able to articulate these topics, those aren't good advisors. All right. This is my mission in my life. Like, I want to help people. These are the habits I figured out on my own. And I want to teach others, and I want to help my clients get to where they want to be. So consider different advisors if they're not telling you this. If all they're sharing is memes and telling you the same tired story, they're not helping you. They're just salespeople. Okay. So as a byproduct of those habits and continuous discipline, you may just get rich. And that's it. That's the story today, guys. All right. So make a plan. Don't get frustrated, because you're seeing all this stuff online, all these memes, all this stuff, the prices are going up. You're going to miss the boat, fear of missing out, getting frustrated. You're never going to own a house. This sucks. This one was going to get elected and give me money. This one didn't, blah, blah, blah. It doesn't matter. You can only control what you can control. And we create good habits, right? We make a plan. We pay ourselves first. Always pay yourself first, right? You're not losing money paying yourself first. If there's an emergency, you have a savings. Like, it's crazy, right? But hey, that's it. That's the strategy. That's the real estate video for today. It all ties together to everything else. That's my vision on things. I'm so excited, guys. All right. Thanksgiving coming up. One of my favorite holidays of the year. All right. Take care, everybody. Have a great weekend. And don't make fun of my voice too much. See you later.